Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be discussing what treasury bills are, how they work, and why I actually put a significant chunk of my money into them recently. Make sure to stick around to the end of the video so you can see exactly what I bought and how much I bought. So what exactly are treasury bills? Treasury bills, or T-bills for short, are essentially just short-term US government bonds. These bonds are sold by the US government at auctions, and they have maturity lengths ranging from 4 to 52 weeks. The interest rate on these treasury bills is fixed at the time of the auction, but the interest works in a bit of an odd manner. Instead of getting paid interest throughout the course of owning the bond, T-bills are sold at a discount, and then when the bill matures, the owner receives the face value. So let's walk through a basic example here. Let's say we want to buy a 1-year or 52-week treasury bill. The most recent 52-week treasury bill that was auctioned will expire on November 2nd, 2023, as we can see right here. And that means that you would pay around $95.75 for this bond if you wanted to buy it right now. And if you held this bond until November 2nd, 2023, you would receive the face value of $100 back at that time. Over time, the price of this bond will actually go up as the maturity date gets closer. And the reason for that is that when the price goes up, the earnings will be lower at maturity. This makes sense because you would expect to earn less if you own the bond for 6 months than for a year per se. There are quite a few advantages of treasury bills that I like a lot. First of all, the minimum purchase for treasury bills is only $100, and they are available in $100 increments, which is pretty manageable for the vast majority of people in the United States. Additionally, unlike I-bonds, which have a $10,000 per year limit, treasury bills have a $10 million per year limit, which to the vast majority of people in the US is essentially just no limit. And this means that you can pretty much buy as much treasury bills as you want. The other thing that I like is that there are a lot of maturity dates. As I mentioned before, these range from 4 to 52 weeks. Specifically, they have bills that mature in 4 weeks, 8 weeks, 13, 17, 26, and 52 weeks, which makes them super flexible. And there are new bills auctioned off every week, which makes the process super convenient. Another important question when looking where to allocate your money is the subject of taxes. And the interest earned from treasury bills is subject to federal tax, but it is not subject to state or local taxes, which is a bit of a small perk. Another obvious advantage of treasury bills is the interest rate. They're going to be pretty much any high yield savings account out there, which currently are maxing out at around 3% right now, while you can get treasury bills between 4 and 5% right now. There's certainly some drawbacks to treasury bills that should be considered as well. The first is that you are locking up your money to some degree, at least for a period of time. If you do buy treasury bills through Treasury Direct, which we'll discuss in a minute or two, you must own the bond for 45 days before you can sell it. With other brokers or banks, you may or may not be able to sell it before maturity, but generally speaking, I would recommend buying a T-bill and just not touching it until it matures. You can make that decision when you buy it to, only put money in there that you won't need until the treasury bill matures, and then you won't have to worry about that issue. Another disadvantage, which can really also be an advantage as well, is the fixed yield. Although you are beating a bank account, there are other options that could earn you more, like you could invest in the stock market or real estate or other commodities, and those could potentially earn you a higher return. However, these other options could also make you lose money as well, which is where the advantage part comes in. Treasury bills have a fixed yield when you buy them, and that's what you're going to get. You're not going to get any more, you're not going to get any less. So if you want a conservative place to put your money just for a short period of time, and you just want to make sure that you earn, at least something, then treasury bills could be a good option. So how can you buy T-bills? The first way is just to buy them through the government, which you can do at treasurydirect.gov, which is the government's website for selling bonds. And this is not how I bought my T-bills, but from looking at the website and talking to some people and hearing from some other people that have used it, it does look fairly simple. You just have to open an account with the website and then connect your bank account, and you can buy pretty much any bond that the US government offers, including treasury bills. One of the advantages of the Treasury Direct website is that you can choose to automatically reinvest your cash back into the same bond when that bond matures. So you can set this up when you buy the treasury bill initially, or you can set it up at any point while you're owning it, up to 4 days before it matures. Another way to buy treasury bills is through a third-party bank or broker. This is the route I chose. I have a few different investment accounts with Fidelity, so I bought my treasury bills through Fidelity. It's pretty straightforward using their website. You just go to the research page of the fixed income, and then you can select bonds, and specifically you can select US Treasuries, and then you can filter out by maturity date and yield, and then you can see all the available options there and choose which one to buy. So now let's talk a little bit about what treasury bills I bought and why I chose to buy them. Fundamentally, I just bought treasury bills as a way to earn at least something on some excess cash that I had lying around in the short term. For a variety of reasons, I didn't really want to invest and just dump this cash into the stock market. So at this point, my main investment vehicle is my Roth IRA. That's where I have the vast majority of my investments. And right now that's already maxed out for 2022. So I can't contribute any money to it right now. And I really don't want to dump a bunch of cash into my dividend portfolio at this point. My goal with that portfolio is to slowly increase the monthly contributions over time as my income increases so that is at a sustainable level. So what I ended up doing is buying about $4,000 worth of treasury bills, and these bills are set to mature on January 17th, 2023, and I made that purchase on October 26th, so just a few weeks ago. This bill was actually issued on September 20th, which makes it a 17-week bill, but I will end up owning it a little bit less, about 12 or 13 weeks. And if we look at this screenshot here from my Fidelity account, I ended up spending about $3,965 to buy my treasury bills, and when they mature in a few months on January 17th, I'll be paid $4,000 into my bank account, which will leave me with a profit of about $35. So a $35 profit doesn't seem like all that much, but it's a bit less than a 1% return for owning the bond about 83 days. And if we were to reinvest back into that bond for a whole year, then that would give us an annualized return of about 3.93%, which isn't too bad at this point in time. So when this treasury bill matures, I will likely put a lot of it into my Roth IRA for 2023 since it will be January at that point and I'll be able to do that. I think there's a chance as well that I will buy more treasury bills for another period of around 6 months or less, but I really can't say for sure at this point. I haven't made any decisions for sure. So let me know if you do have any thoughts to share about treasury bills. I would be interested to hear. To be honest, I never really thought that I would be buying bonds, but I think it makes a lot of sense for me at this point just to park some extra cash there and earn a little bit more interest than I would earn at a high yield savings account. I would be interested to hear if anyone else has bought any T-bills recently and if anyone else has been thinking about it as well. If you want to discuss further, make sure to drop a comment down below in the comment section and join the Discord server as well. If you are interested, I'll leave the link in the description. Thanks for watching, and I'll see you all in the next one.